All right, everyone, welcome and thanks for joining us for our College Planning and FAFSA Overview webinar with Weber State Credit Union. We have lots to cover, guys, so we'll go ahead and get ourselves started shortly. We have a few people still streaming into the lobby right now, so while we're getting started, just to give you the heads up, if you're having any technical issues, any challenges with audio or video connection, just quick shoot me an email at ken@lendkey.com. That's Ken at LENDKEY.com. Also, you'll notice in the lower right corner of your screen, you should have the GoToMeeting prompt where chat is available. So if you have any quick questions or anything you want to send my way, you can actually use that format to send it to me directly through the system here. So it's great to have that kind of connectivity. We are going to go through a lot of slides here, folks. So we'll go ahead and get ourselves started. This is a hugely critical and important topic for so many students out there today, and that's why Weber State Credit Union has put this program together to help so many students out with the biggest challenge they're facing, financially speaking, trying to figure out how to pay for college and where to attend. This is the biggest question on the minds of young people today who are looking for higher education opportunities. So let's go ahead and get started. So on the agenda, FAFSA goals, financial aid timeline to get yourself acquainted with where you are on the schedule, at least as the calendar is concerned. Terms you should know, get yourself comfortable with some of the vocabulary terms you'll run across when dealing with financial aid so you can intelligently negotiate and speak with them on their terms. It's important to understand where the financial aid office is coming from, and they're going to throw a lot of acronyms and new concepts at you that could leave you a little flummoxed if you're not following up on these items. So it's so important to get the phraseology down. Some getting started tips. Probably the hardest part is just getting started. So we'll help kickstart your process so that way you can have some fun getting it done. And the 2014-2015 FAFSA review. Now, if you're going to be going to college next fall, we have all the complete screenshots of everything you're going to encounter to file that FAFSA. Now, if you haven't filed this FAFSA yet, this is a real treat because we're going to make it easy for you to get it completed. Top FAQs, that's frequently asked questions. I can dig deep into my experience. I actually am a 10-plus year financial aid veteran. I have a lot of perspective on that, so I could probably help you answer some common questions. And then compare college choices. Just some framework as to what to think about when you're looking at to what college you might want to attend, and we'll wrap it up at the end. So as mentioned before, I am a veteran in this area. My name is Kenneth O'Connor. I am a former financial aid counselor at Fairleigh Dickinson University in New Jersey, having served somewhere in the neighborhood of 30,000 student accounts. So I've seen everything as far as funding is concerned, whether it's grants, scholarships, student loans. There's a lot of variety, of course, as far as financial aid is concerned. But ultimately, I think I could probably shed some light into some of the areas of concerns that families have out there. College is expensive now more so than ever. And the stakes are higher than ever, considering the challenges our economy faces, considering the challenges that young people face. So, we can really get into this and help make sense of it all to help you make a better college choice that makes the most sense, not only, job-wise and future-wise, but also financially speaking today. And Weber State Credit Union is supporting that full-fledged to help you make sense of it. So let's go ahead and get ourselves started. Now, FAFSA goals. The FAFSA, free application for federal student aid. Why FAFSA? Good question. It's where it all begins, folks. This is where you need to go to get your financial aid started if you're going to qualify for any kind of funding. Financial aid awareness is a huge topic, especially in the realm of financial literacy. So many people are very concerned about how they're going to pay for college, but when they don't know what their financial aid eligibility is going to be, it creates great stress, not only for the students but also for the parents. If you're a little more aware of what financial aid was out there, it probably would demystify the process. Family team effort. I find that many families might be working against each other when it comes to qualifying or figuring out what they're going to get for financial aid or getting admitted to a college. You find that sometimes schools trying to work together ends up being a chore being shoveled off onto one person. So that can be a great challenge. Don't let that happen to you. You don't want to make it like just mom is dealing with it or just dad is dealing with it or make it into a chore for the kid to do by themselves. That's not going to work. Timely completion. Guys, there's deadlines associated with qualifying for financial aid. So if you don't have your ducks in a row to get your FAFSA filed on time, it could cost you a lot of money. It's a minimum amount of money. There's only so much to go around. Once the money is given to someone else and you're late, you're put on the back of the line to qualify for that funding. So the earlier you file, the more likely you're going to qualify. And then ultimately, you do this all to achieve the best school offers available. The reason why is, look, college is really expensive. If you're not doing all these things that I'm talking about, you're setting yourself up for financial failure before you can even get started. But if you're getting ahead of the game, you're putting yourself in position to qualify for the most funding, to make college most affordable. And you can make smart choices that way. You want to be in the driver's seat. You don't want to be forced to play catch-up when it comes to financial aid because college is too expensive. So let's look at the financial aid timeline. So here we are. It's already March, right? We're well into the 2014 year. But this is a calendar to help you get comfortable with what to expect in the next couple of months, especially if you're starting college this fall. So by January and February 15th, you want to get your FAFSA filed, and you want to be in the process of submitting all your admissions requests. Now, already you might be a little concerned. February 15th already ended like 2-3 weeks ago, right? Well, just to clarify, residents of Utah, your FAFSA deadline at your state is April 1st. Hallelujah. It's March. So you have enough time to make sure that you can get your FAFSA filed in a timely manner. Other states are not the same. But because it's better to be safe than sorry, when I speak to many families out there, I advise them to get the FAFSA filed by February 15th to maximize total review for eligibility for financial aid. So this way, by March and April, your admission responses are getting processed and sent back from the schools, and you're also going to receive financial aid award letters listing exactly what you're eligible for. And then by May, you're submitting your deposits, you're maybe living on campus or maybe deciding to commute, your verification requests might be sent in. You're going to wonder, what is verification? It sounds kind of scary, right? It's kind of like an audit or something like that. Well, it kind of is. But let me break it down for you. What verification is the school must, by federal regulation, request copies of parent, tax, and asset information to make sure everything on the FAFSA is the same as what the tax return says. It's a big process. Anywhere from a third to half of all the students on campus end up getting this request. So if it happens to you, it's nothing to be alarmed about. But I do guide you a little bit through the process in this webinar to help you get comfortable, so that way you're not shocked if you get this request. June, July, and August, your billing statements are coming in the mail or through your email. This is when you figure out how much you're really going to owe the school. You could subtract out your financial aid and you realize you're still going to have a bill. So you might set up a payment plan where you make monthly installments, or you start looking at your student loan options. And this is where your credit union gets really busy. During the summer, this is when people are submitting requests asking for student loans to help pay for the rest of that balance. And then by January next year, it's back to the future. The new FAFSA is due. Folks, it's not just one and done. You're going to be filing a FAFSA every single year until the student graduates, hopefully in 4, but maybe 5 years. So you want to make sure you're ahead of the game every single year. The first year is the toughest year. You're getting comfortable with the process, but I guarantee after you get through the first one, it's going to be like a breeze. You'll be able to handle it yourself. You'll be able to get it done in time, and you'll always qualify for the funding you need as long as you're getting it done. So, terms you should know. And there's some vocabulary terms to get you conversationally comfortable with the financial aid office. So let's get into it. Cost of attendance, that's COA, another acronym, COA. That is the maximum amount of costs associated with attending your institution based on your registration status and your living arrangement. So those are cost components including tuition, room, board, books, transportation, and miscellaneous expenses. Now, when you look at your billing statement, you're going to notice right away, hey, they're only listing tuition, room, and board, if you're living on campus, right? Tuition, room, and board. What about the extra costs? The transportation, the books, and the miscellaneous, right? Well, those things are separate. Those things are costs borne upon the student separately. They're responsible for paying them for them essentially out of pocket. But your billing statement is going to show tuition, room, and board. So your cost of attendance in total is going to be greater than the billing statement that you're going to see in the mail. This is an important thing to understand, because that means the total amount of financial aid being awarded to the student is going to equal at maximum to the cost of attendance. Let's say your cost of attendance were $30,000. Okay, that means you could have no more than $30,000 in total grants, scholarships, and student loans paid to the account. Your actual bill from the school might be $25,000. The difference between $30,000 and $25,000 is, of course, $5,000. This would allow for a refund check of about $5,000 to be given to the student. That's why sometimes there's a cap, okay? We want to protect students from over-borrowing. So this is done to protect the student from over-applying for extra student loans, but does give them a little bit of budgetary breathing room so that way they can pay for the normal expenses that will occur, such as transportation, books, and miscellaneous expenses, clothes, extra food, microscopes. Look, there's an endless amount of ways that college students could potentially spend their money on campus, right? But they do put a cap on it, especially for student lending purposes. It's a consumer protection. EFC, expected family contribution. This is the calculation given by the FAFSA. They figured this out by calculating your basically a big long equation that I'm going to gently take you through in some later screens, but what they do is add up your total assets and income, and they figure out how much your family is believed to have available towards paying for college education. Now, I say believe because there's a lot of controversy about this, especially for middle-class families. They're going to calculate that, based on your income and assets, let's just say they believe you have $10,000 available to pay towards college expenses this year. But last time you checked your personal assets, you didn't have an extra $10,000 lying around to pay for college, right? So there's a squeeze going on right now for many families. If you are in a middle-class income zone, you probably have just enough money to have an EFC that puts you out of eligibility for financial aid, but you don't actually have enough cash lying around to really pay for school out of pocket. So this is basically a term used to designate what eligibility you're going to have for need-based funding. It's not necessarily going to prove exactly how much cash you have to pay. It's more of an expectation than a guarantee. All right. Financial need is your cost of attendance minus your expected family contribution. So to quote before, $30,000, if that were your cost of attendance and your EFC were $10,000, $30,000 minus $10,000, of course, equals $20,000. So your financial need would be $20,000 in that particular scenario. You can see now how the cost of attendance and EFC are interconnected because they will determine ultimately what other need-based funding the student is going to qualify for. Then there's merit-based funding. These are your scholarships. These are the monies that people get excited for academic reasons, for high GPA test scores. People qualify because of athletics, community service, leadership, many different qualities that students receive scholarships for, but ultimately it has to be due to merit that you receive this funding. Need-based funding works a little bit different. If it's need-based, it means that you have need based on your FAFSA. Basically, the lower your income is, the lower your assets are, the more likely you're going to qualify. The higher income and the higher assets, the less likely you're going to qualify. So based on your FAFSA, they'll figure out whether or not you're going to be able to acquire such grants. So getting started, what documents do I need? Well, here's a long list. Don't get nervous, folks, but this is just a quick list of what you may need in order to complete your FAFSA. So Social Security number, driver's license, most likely it's your tax returns in the form of 1040, 1040A, or 1040EZ. Maybe you're filing your tax returns electronically. Also other information like untaxed income records, bank statements, registration or permanent resident card if it's applicable to you. It's just a list of documents, folks. Nothing to get nervous about. But for convenience purposes, I would highly recommend you keep this stuff next to your desk so that way you can complete it appropriately. But ultimately, we want to make it easy, and I would think you'd want to make it easy on yourself. File it electronically. It's really changed in terms of getting this procedure done over time. I remember back when they only did this on paper, but today, if you're electronically filing your tax return, you can now electronically pre-populate most of the easy answers on your FAFSA. So I would highly recommend completing it this way for convenience purposes. It's just a matter of having information forwarded from the federal tax agency over to the FAFSA. So go ahead and use the IRS data retrieval tool and make it easy on yourself. So getting started, what else do I need? PIN for parent and student, pin.ed.gov. It's for FAFSA and e-signatures. Basically, it's like this. You need to e-sign your FAFSA. It's really the only way to go. If you're signing it on paper, it takes weeks of additional processing time. but when you're doing electronically, it's done within minutes, not seconds. So in order to electronically complete or sign the FAFSA, you must first get your PIN number at www.pin.ed.gov. And once you register for it once, you can reuse it every single year for the next few years. Also, if you're a parent with multiple children, you're going to use the same PIN number for each child so you can e-sign each application. For time purposes, look, 20 to 60 minutes. It could be even less than that. Look, it can take very little time to complete the FAFSA. It could also take you a little bit longer depending on how complicated your tax situation is. You can be sensitive to the fact that certain business owners need more time or have more complex information they have to review. Look, it could take you a little longer than you thought, but for a lot of people out there, it can be as fast as 20 minutes. Also, they have the option to save it and complete it later. If for some reason you're interrupted during the process, you can step back and come back later, just for convenience purposes, guys. It's a lot easier than it used to be. Also, www.sss.gov, that's a selective service. Now, the Selective Service is actually the modern rendition of the draft. Now, it's not active. No one signing up is going to be brought into a war zone, of course, but the reality is that in case of national emergency, they still keep a database of young males that can be easily called up for service for our nation. So, if you're going to qualify for any financial aid, you must also file with Selective Service. This is for everyone, all males. Okay. Now, when you look into what's changing in our society today and what's happening, one of the new things is women taking an active role in combat duty in the military. There's been some talk in Washington, D.C. about whether or not women would have to now subject themselves to Selective Service requirements, just like males would if they, too, are now eligible for active combat duty. But as it is today, women are not required to register for Selective Service to qualify for financial aid purposes. So I would say don't worry about that. This is only something for guys. So as it is, if you're going to qualify for financial aid, make sure you get on here, www.sss.gov. If you don't do it, your financial aid will actually be suspended until you go back and complete it. It's a simple process, folks, so don't miss it. So here's the FAFSA webpage, https://fafsa.ed.gov. This is the main page. This is what it looks like. I give a lot of credit to the federal government for putting together a pretty good program here. Again, I remember back when it was filed all on paper. It was a different sort of program back then. Today, it's as simple as getting to the right website and filing it appropriately. So make sure you get online. Now, there are FAFSA filing services out there where you can pay extra money for someone to help you out with that. Maybe it's a service you like. Maybe it's a service you don't need. But I think after this quick tutorial, you'll probably feel pretty confident to handle most general questions on your own and get your kid empowered to do the same. So getting started. Student info, demographics. Look, this is where it all begins. You would be surprised if you know how many people had an error on their Social Security number or even their date of birth, which creates real problems in processing. It can slow you down. So make sure this information is accurate and correct the first time. Double check it, triple check it if you need to. Also, make sure you're following the correct year FAFSA. If you're starting college in fall, it's a 2014-2015 FAFSA you need completed. If you're in school right now, spring 2014, you would be part of the 2013-2014 academic period. That would be this FAFSA right here. So make sure you're following the right year. If you follow the wrong year, it could really hurt your financial aid eligibility because you're under the impression that you did it on time when in fact it's not even completed. So you want to make sure you zero in on the correct FAFSA filing year. Also, in case you need to log off the FAFSA and come back and complete it later, this would be a password screen to allow you to do so. So make sure you have the separate password. This is separate from your PIN. Keep this in a safe place so you don't forget it, and that way you can log back in and finish your work later. If you need more help, they actually built in some FAQs into the FAFSA. Some general questions you can get answered. It's right there about documents and stuff like that. But it's probably helpful to access these things midway through. So again, another improvement from the government. So demographics, date of birth, right, but also things like your address, your phone number, and your email must be very accurate in order to keep this file running smoothly. If you don't have the right data on this, it could dramatically slow down processing of your FAFSA. So make sure it's right the first time. Student eligibility, quick screen on making sure that you're qualified to receive federal financial aid and other funding. So they want to make sure that you meet certain citizenship requirements, you have a high school diploma, and we want to clarify what degree you're going for. Now on this screen it talks about first bachelor's degree. There's a drop-down menu that's going to list bachelor degree types, associate degree types, master's degrees, PhDs, all different varieties of school or educational degree programs. It's important to clarify that if you're just getting out of high school, you're probably pursuing your first bachelor's degree. Okay, so next page. We also want to make sure the high school you went to qualifies as a high school, right? So it has to be in the database somewhere, somehow. This is another quick student eligibility issue they added into the FAFSA, but for the most part, it doesn't create any sort of sticking point for anyone. School selection, now this is a very interesting database that they've really grown over time, but basically you can add 10 schools to your FAFSA, so that way the information can be forwarded to all 10 of these schools, and at that point each school takes the data and starts processing what financial aid eligibility you will actually have. So for a lot of people out there, they want to search geographically, so they make it convenient. You can search by state, city, or school, and they can give you a list of all the schools that would be in that geographic location. So for example, here's North Carolina, right? So it's much more convenient than it used to be. I mean, it used to be you had to look into this long paper booklet and find school codes, and if you put in the wrong school code, it could actually, by data entry error, you could slow down the application again. The school never receives the information because they have the wrong school code, right? Well, that's impossible now because you can actually look at the data, add it, and it will show exactly on the right side of the screen what you're eligible for. Now, as far as housing is concerned, look, housing is going to affect your cost of attendance. So it's important that you select this correct the first time around. And here's how. If you're living on campus, you're probably going to have the highest cost of attendance because when you look at the cost of dorm and meal plans, you realize it's pretty expensive. So on average, your on-campus selection will be the highest cost of attendance. If you're living with parent, it's probably going to be the lowest cost of attendance available because you're under the assumption that your cost of living by way of living under your parents' roof and having access to their food makes your cost of living very low. If you're living off campus, well, this can vary depending on your personal expenses and living arrangement, and also depending on regional economic data. If you're living off campus in an apartment in New York City, it's going to probably have a different cost than if you're living off campus in an apartment in Indiana. It's just the nature of regional, geographic, and economic variances. But off campus will vary depending on your personal circumstances and whether you're considered a dependent or independent student. A grad student might actually have a much higher cost of attendance living off campus depending on what kind of apartment they live in. There's a lot more to this subject. Just for brevity's sake, I'll just advise that if you have extenuating circumstances or if you're a parent going back to college right now and you have children that you support, you might be able to have your cost of attendance increase to reflect the unique expenses that you face as an independent student. If you're a dependent student, there's not really a whole lot you can do to adjust your cost of attendance because you're just going to be listed under your parents as far as your costs are concerned and who's helping you. But look, when you're trying to compare school choice, it's important to note that this will change your financial aid eligibility. Because, again, your cost of attendance is a big part of how they determine your financial need. So if you select you're going to live on campus, probably it's going to prove you're going to have higher financial need, which would probably mean they're going to increase your financial aid eligibility. So you might want to list yourself as an on-campus student first, find out what eligibility you received, and then go back later and reduce it down to an off-campus or with parent selection later if you figure out that you'd rather live at home or in an apartment. Find out the best offer first and reduce it down later. It's easier to do it that way than it is to go low and estimate that you're going to commute and then change your mind later and say, I want to live on campus. Because by then, the financial aid's already been given away to someone else who filed what they wanted the first time around correctly. So school comparison. It's a handy screen. There's another new improvement to the federal program on FAFSA. Basically, you can easily look at some tuition and fees numbers, some net price averages, graduation rates, some other items to get you acquainted with the selections of schools available. You'll also know some important things like net price, graduation rate, and retention rate. Well, net price is your total bill after your financial aid pays to the account. Your graduation rate, that would be how many students are actually finishing school within 6 years, which is a pretty long period of time. And then retention rate is the amount of students that stay on board between freshman and sophomore year and then continue along. So in general, you're going to want to look for schools that have higher graduation rates and higher retention rates to give you an idea of what kind of student body they have, but that's not always the case, right? So it's good to just pay good attention to these things so you understand what's going on. Dependency status. This is an area of great concern for a lot of families out there, so I'll take you through a few questions, or at least the questions they're going to ask here so you're comfortable with what it says. So here we go. All right. There's basically two different types of student types. There's dependent and there's independent. What's the difference? Good question. And why does it matter? You'll understand after I finish this. A dependent student is one that must include parent, tax, and asset information on the FAFSA. An independent student does not have to include parent, tax, and asset information on the FAFSA. There's a real distinction here. In order to be considered independent, you would have to answer yes to at least one of the following questions. If you answer no to all of these questions, you will be considered a dependent and therefore must include parent, tax, and asset information on your FAFSA. So let's take you through. Were you born before January 1st, 1991? If yes, you would be age 24 or older now, and that would indicate you are an independent, and therefore you would not have to include parent, tax, and asset information on the FAFSA. If you answer no, you're a dependent, parents are on the FAFSA. As of today, are you married? If yes, you're independent. If no, you're a dependent. At the beginning of 2014, 2015, are you pursuing a master's or a PhD? If yes, you're independent. If no, you're dependent. Do you have children of your own? If yes, you're an independent. If no, you're a dependent. Are you currently in the military or a veteran? If yes, you're independent. If no, you're a dependent. At any time since you turned age 13, were both your parents deceased? Were you in foster care or a ward of the court? If yes, you're independent. If no, you're a dependent. Were you an emancipated minor? Were you under legal guardianship? Or were you homeless as a child? If you can answer yes to any of those questions, you would also be considered independent. But again, if you answer no to all these questions, you are a dependent. Now, there's some controversy here. You know, in the news right now, there's a case actually right in New Jersey about a girl suing her parents over assistance for helping to pay for college and higher and other educational expenses, which is, you know, a big deal, right? It has a lot to do really with these types of questions about who's considered a dependent and an independent. But basically, what it comes down to is that if a person were 18 years old and they were able to consider themselves an independent student, most likely they would have limited income on their own at age 18, very limited income on their own, right? If that's the case, then they would probably qualify for a great deal of financial aid because they don't have to include their parents on the list. That's interesting, right? But now when you include parent, tax, and asset information on the FAFSA, that could remove eligibility for financial aid for most 18-year-olds. So, I mean, look, that's the reality of it. The controversy comes up when you have people who are seemingly independent, but technically not. Let me give you an example. I dealt with this quite a bit working as a financial aid officer. A student comes to my office, explains their story. They're about 21 years old. They maybe live in their own apartment and have their own job. Maybe they're with a boyfriend or a girlfriend. They're pretty much taking care of themselves. They pay for their own car payment. They have their stuff together. They're just going to school. They occasionally stop home and do some laundry and say hi to mom. But for all intents and purposes, they're living on their own. Well, technically, because they can't answer yes to at least one of these questions, they're going to have to be considered a dependent student, whether they like it or not. So it really changes the way in which we legally judge someone as independent. I mean, think about it. When you're 18, you're legal to vote. When you're 21, certain other things become very legal. I think Obama has extended insurance coverage to people into age 25 or 26 off their parents' coverage now, right? So at what point is someone really considered an independent versus a dependent? Well, this question remains up in the air right now, but as it says on the FAFSA, you're a dependent student until you're age 24 or older unless you can answer yes to one of these questions, for good or for bad, whether you agree with this or not, whether it matches your lifestyle or needs. This is the requirement to qualify for financial aid. That's why this stuff matters. And if this is a concern to you, I'd highly recommend you bring this up with your children and perhaps your legislative branch and let them know how you feel. But this is the reality we face. So that's how that works. Moving on. Parent section. Let's assume the student is a dependent, and we're going to have to include parent information on the FAFSA. So guys, you want to make sure that you have your email address correct, all your fundamentals are accurate. There's nothing like making mistakes on your FAFSA that costs you lots of time. So please make sure that stuff is accurate the first time when you submit it. We know the biggest problem is the wrong data, things like the wrong social security number, the wrong date of birth, the wrong email address. Look, that can dramatically change and reduce the time or reduce the speed at which this form can be processed. So please make sure that information is accurate the first time. It'll save you a lot of headaches. The parent section. There's been some updates to the parent section of the FAFSA for the 2014-2015 year. The big change is that unwed parents that are cohabitating now are both required to include their information on the FAFSA. It used to be that unwed parents cohabitating didn't have to include both of their information on the FAFSA. Only the one parent claiming the student on their tax return would. Well, that's changed. This is due to social issues. There's been an increase in the amount of children being born out of wedlock. And as a result, we see a lot of parents who are not technically married but cohabitating. Well, the FAFSA is now going to say both parents, if they're cohabitating, must include their information. But now what about divorced parents? How does that work? Different story. Parents that are divorced, well, that means one student or the student would be listed as under one of the parents' care or one of the parents, as a dependent on one of the parents, probably claimed on one of the parents' taxes, right? That would be the parent that would claim the student on the FAFSA. That would be the parent responsible for submitting their information to the FAFSA. Basically, it would be technically the parent that cares for the student more than half the year, to get technical about it. The other parent is out of the picture as far as the FAFSA is concerned. That parent does not have to include their asset and tax information. So this is an interesting point of contention for families out there because if a family is divorced, the student can be claimed by the parent that has lower assets and income and still qualify for substantial financial aid. So, that's an area of concern for families out there today. Also, post-DOMA, same-sex couples are now on the FAFSA and counted the same as any other parent would be. So there's been a lot of changes to the FAFSA this year as far as families are recognized on the FAFSA. But ultimately, household size, look, that will have an impact on eligibility. If you have multiple children going to college at the same time, that means your EFC will reduce accordingly and fractionally to make up for the fact that many kids are attending at once. So your household size does affect financial aid eligibility. So parent tax info. How do you file your taxes? Probably electronically. Maybe it's 1040, 1048, 1040 easy, whatever it is you have. When do you complete it? Good question. Hopefully you have it done by now, but maybe you don't. I would highly recommend you have your tax return completed before you go ahead and file your FAFSA. But I understand there's challenges with that. Not everyone can be on time like that. Some people own businesses. They have more complicated tax returns. Some people need an extension into the summer. So here's what you do. If you need to file your FAFSA, if you have a deadline approaching, but your tax returns are not yet ready, estimate your numbers. That's all you got to do. Estimate your numbers. You should probably have some kind of idea what your taxes would be or would say. I mean, if you know you made about the same amount of money in 2013 as what you made in 2012, you'd probably have similar numbers on that old tax return. You could use that as a guide. So the real point is just to make sure that you get it filed. Now here's the trick. If you don't have your tax return filed in time to meet your deadline for financial aid, go ahead and estimate the numbers as best you can. They've even built in an income estimator into the FAFSA to help you with this. And basically, they look at your geographic location and what occupation you have, and they'll give you an average of what your income might be, just to help you. It's more important for you to file your FAFSA on time with estimated figures, because that way you are reserving your space in line for review for maximum funding eligibility. Now, what about dislocated worker? Well, this is a way to help identify people who might be facing major financial challenges while their child is attempting to attend school. So basically, if you are a dislocated worker or you're unemployed, your income is probably dramatically reduced, and as a result, you could qualify for increased financial aid. But if you were not aware of that, you might drop the ball on this and not realize that there's a process involved. So what FAFSA does is allows you to click this button to list yourself as a dislocated worker, and that way when the school receives the info, they can determine if they can appeal you for more funding. So that's how that works. Also, they ask additional information on the parent regarding tax credits and support. They really do go to great lengths to figure out exactly how much money you might have available to pay towards college. So they ask for special things like combat pay, cooperative education programs, grants, scholarships reported to the IRS, taxable earnings from work study if you had that, child support paid. They're really trying to get into the calculation here. Additionally, things like payments of tax-deferred pensions, IRA deductions, child support received, tax-exempt interest income, untaxed portions of IRA distributions, untaxed portions of pensions, housing, food, and other living allowances paid to the military, clergy, and others, veterans on education benefits, and other untaxed income not reported such as workers' compensation or disability. So they really get into the nitty-gritty. Now, this isn't the case for every family, but for a good number of them, these are things they must list on the FAFSA. Now, here's a very interesting section. Asset values, cash, investments, and real estate. Now, what it says here is you're supposed to list the value of those balances. But if you notice, it says as of today on each one. As of today. What is your total current balance of cash, savings, and checking? As of today. Net worth of parents' investments, including real estate. As of today. Parents' business and or investment farms. What is the value? Good question. Well, the time element indicates that today isn't the same as yesterday. So let's say yesterday you had $4,000 in your checking account. Great. Today you had to pay your mortgage. Well, you probably don't have $4,000 in your checking account anymore. It's time sensitive, right? Well, then you start taking a step back and thinking about it. If you have credit card debt, or if you have a mortgage, or if you have other bills that you know you need to be paying right now, or if you have student expenses like transportation or books or microscope or whatever it might be is going to be necessary for the student to attend college soon. Yesterday you could have spent that money. Yesterday you could have used to pay down your credit card debt. Yesterday you could have made a prepayment towards your mortgage. Yesterday you could have bought the car for the kid to help him get transportation to the school. The point is that the money was spent yesterday, and as of today, none of it's left. So you want to minimize the amount of excess cash you have available if it could potentially impact financial aid eligibility. Now, there's a point where it just gets ridiculous because your assets might be so high in your business or your real estate holdings that there's no way around it. You can't just suddenly fake a real estate sale overnight, right? But here's some things you should know when it comes to investments. Real estate, your primary home, single-family residence, only your family lives there, that's not considered an investment. What is considered an investment would be a second property you would own, maybe a condo, maybe a timeshare, maybe something else. That's considered a real estate investment, separate from you, or separate from the primary household. What about if you live in a multi-family unit, like a two-family home, let's say? Let's say you live on one floor and you have renters on the second floor. Okay, great. Let's say it's a $500,000 unit. Okay. Technically, $250,000 of it would be considered an asset value for real estate. And the other $250,000 of it would be considered your personal domicile, your home. Okay. What if you have a mortgage on that? Good question. Let's say you had a $400,000 mortgage on the whole property valued at $500,000. Well, you would subtract that right off the top of the investment value. That would leave you $100,000 divided by 2. That would leave you an investment value of actually $50,000. All right, so what's a strategy that people follow? If they have investment property, they take full mortgages out off of their property for investment, and then they use that money to help pay for college education and perhaps increase financial aid eligibility as a result. That's just a small tactic that might help certain families out there. Now, businesses and investment farms, those items, look, that's going to be dictated based on evaluation of a couple different items, but ultimately you're going to have to deposit a number there if you have something there. Now, what about 529 plans? They work a little bit differently. They are an investment vehicle, but they have tax advantages that are very handy for helping to pay for college. And also, they're only weighted a tiny fraction of their full value on the FAFSA. So you don't have to feel nervous about putting money in a 529 plan. If you're looking at this from a long-term perspective, it's still worthwhile for you to put money there to save towards college, because all the money that grows in a 529 plan grows on a tax-free basis. And as long as you draw the money out towards expenses for higher education for your kid, it ends up being completely tax-free. And again, it only is weighted a fraction of its full value against financial aid eligibility. So I've had the pleasure of working with families that have really worked hard to save money long-term in a 529 plan, and they come from modest means with relatively low income. But they were still able to save a substantial amount of money long-term. They end up getting access to the best of both worlds. They were able to qualify for financial aid because their income was lower, and they still had quite a bit of money saved available tax-free in the 529 to help pay for college education. So that's awesome. It just goes to show you that some families can really make it work when they take advantage of the opportunities they have. So student section. Now, students don't always file taxes, as we know. So this might be much simpler than the parent section. And, if you're dealing with this, congratulations. But not every student's the same, so we need to be sensitive. They're going to ask you a lot of the same questions that you've already seen. But many times students don't have answers for any of these, so 0 is the correct answer. Additionally, untaxed income, it's supposed to be reported. But let's talk honestly about untaxed income for young people. Technically, it's supposed to be listed on the FAFSA. If you're making cash income, shoveling snow, or doing some other type of local community work where you're making cash, or waitressing, or whatever it might be, it's supposed to be listed as untaxed income somewhere on your FAFSA. But the reality is that if you're earning cash income that's untaxed, no one knows where it is, no one knows where it's going, no one knows how it's being spent, no one really has to list it on the FAFSA. Now, don't go around saying Kenny's telling you not to list something on the FAFSA. That's not what I'm saying. What I am saying is that for many people out there that do earn cash income, there is no way that it could be proven whether or not they have it on the FAFSA. So this can create a disadvantage or an advantage for people depending on how they treat it. Again, the as of today clause still reigns supreme. On the student section, it's as true as anything. As of today, what's your total current savings in cash and checking? As of today, what's the value of your investments? As of today, what's the value of your business? Good question. And again, as of today, the answer should be 0 if you're following my advice and paying off credit card debt the day before you file your FAFSA. Oh, and also a side note on student assets versus parent assets. It's important to know that parent assets are usually weighted less than student assets on the FAFSA. How much of a difference? Well, to give you an idea, student assets are weighed ultimately at about 20% of their value against FAFSA eligibility. When you look at parent assets, they're weighed at roughly 12% against FAFSA eligibility. So if you're stuck with a bunch of cash, it's probably better to be claimed in the parent's name than the student's name, although having a bunch of cash at all can still hurt financial aid eligibility. It's just that cash in the student's name is weighed more heavily against them for financial aid. Guys, we're on the home stretch, signature section. Student parent PIN number, this is where your PIN number e-signs the application, so that way you can have fast processing. If you're signing this with paper and you're mailing it in, it's going to take months and months of additional processing to complete this form. So make sure you e-sign it with your PIN. And you get that PIN from the website, www.pin.ed.gov, that I identified earlier in the presentation. Confirmation and DRN. DRN stands for Data Release Number. The what-if scenario for you. What if, for some reason, you file your FAFSA and the school does not receive it? What do? What you should do is send the school the proof of your proper filing date with the data release number and the confirmation number you have available. That's what you do. You must send them a copy of the data release number and the confirmation number. Why? Because you must avoid the common mistake people make. You file the FAFSA, the school says they didn't receive it. The mistake people make is they file a second time. When you file the second time, the school picks up the second filing date. That may be later. That may be after the deadline. You've now just sacrificed financial aid eligibility because they have proof that you filed late. And they look at their schedule, they make 10, 20, 30, maybe a 40% reduction in your eligibility because you were late on the FAFSA they received from you. When in fact you know you did file on time and you have proof that you filed on time. So if you file and the school does not receive it, send them the data release and confirmation number, and the school will do what's called a manual override to capture the information from the central processing unit at the government and confirm that you indeed file your FAFSA on time. Verification. So this is a mandated process I had mentioned earlier. This is when the school may ask for copies of parent, tax, and asset information to confirm everything on the FAFSA. It's the same as what the tax return says. Nothing to be scared of, but it is like a mini audit. They're going to check for inaccuracies or potential omissions on your tax return, like that piece of real estate you forgot to mention that you sold and made money on. Yeah, that's the type of thing they're looking for. FAFSA data adjusted to reflect actual data on the financial statements, and ultimately it could reduce financial aid if you made gross errors or omissions. Respond ASAP. Coordinate with the financial aid office to make sure this is done in a timely manner to keep your eligibility intact. Some FAQs: how to increase a scholarship. Student writes an appeal. It highlights additional qualities and achievements that may have been achieved after the student was formally admitted or maybe was overlooked during the admissions process. Remember, guys, scholarships are awarded based on merit. So this is a little bit of a marketing project for puffery. You want to really demonstrate why it is the school should want you there as a student. You want to email to admissions and financial aid and confirm it's received. I say both offices because two heads are better than one, and often both directors of both respective departments work together to figure out how they're going to fund the students they really want on board. This is going to help you know what you're worth and help you compare offers with different schools. Here's a tip. Maybe you get a strong offer from one school and a lesser competitive offer from another school, but you would like to attend. Well, show your preferred school the copy of the superior award letter from the other school to give them an idea of what you're worth, just for comparative sake. Hey, look, it's worth a shot. You get schools bidding for you a little bit, it could help you. Higher probability of success with private schools indeed is true. Private schools work on a different schedule and a different budget. They have to make sure they meet their enrollment quotas to keep their budgets making sense. So it's worth it for them to provide concessions to students. If it's, an extra $1,000 or $2,000, it's all the difference it is to get you to attend. It's worth it for them. Because imagine this. The fear of summer melt is real. What's summer melt? This is when administrators get nervous in the summer because they maybe say had 1,000 students booked to arrive and move in on campus, and come move-in day, only 800 show up. That's a budgetary nightmare they can't afford to have. So you have some power to try to increase funding and gain concessions if it allows you to maintain attendance at the school. So know what you're worth. How to increase grants, guys. Remember, those are need-based awards considering assets and income. But if you can prove an increase in financial need, you could qualify for more. In my experience, look, the economy is tough. And in my last years working at my college, I processed more appeals than in all my other years combined. What had happened was the financial downturn hit a lot of families out there. And what really happened was a lot of people ended up have such reduced income that they were able to qualify for increased financial aid. So typically it's going to document unemployment, but there are cases when severe medical care could potentially increase financial aid eligibility. But that's on a case-by-case basis, so you want to be careful to review that. Just getting glasses, that's not going to count as an extenuating circumstances. But getting major medical treatment, being unable to work because you become permanently disabled, those are the types of things you would want to bring to the school to make sure they're aware of to see if you can qualify for more funding. You must meet financial aid methodology standards. The school will tell you exactly what those standards are. Do exactly what they say. Hand in the forms when they need them, and follow up them continuously until you get the answer you need. If you're following their standards, they must reply accordingly. But the way people screw this up is when they do not submit the documents that are required, or they miss something, or they miss a deadline. Because even if you do submit all the documents after a certain deadline, there's nothing they can do because the money is already gone. They can't make the money magically appear if you miss a deadline to file for special circumstances like this. Be prepared to submit written statements, termination letters, final pay stubs, copy of unemployment benefit summaries, severance package if it's available, different documentation as the school may request. Do exactly as they say. If you do, I guarantee you will get a fair review, and you may substantially increase financial aid eligibility. All right, guys, so that's a whole lot to think about as far as financial aid is concerned. We're going to get ready to close out the presentation shortly. We're going to get into a couple of college planning ideas as far as what the student really wants. And I talk about this a lot because, look, sometimes we lose track of what's really important. But from a student's perspective, you want to grow knowledge. You want to be able to develop skills. You want to be able to create income in the future as a result of what you learned in college. These are important reasons why we attend. You talk to most students out there and ask them why you're attending, and one of the things they say is, hey, I'm really looking to get a job after I graduate. But also you look for things like happiness, social aspects, like meeting people. Often one of the biggest reasons why we attend a school and why is we want to go to a prestigious institution is because we want to meet other students there that could really benefit our life long term. We want to build those relationships. And then ultimately it's to become financially independent from the parents. This is a huge thing, right? But we see this younger generation, this Gen Y, being referred to now as the boomerang generation because they may have moved out to go to college, but when we find them moving back in after they graduate, they went out and went back. This is a challenge. This has a lot to do with the economy they've been hitting. They need to learn how to become financially independent from the parents, and we hope that as a result of attending school and learning all these things that they are in position to do so. This is getting harder and harder. It's getting harder and harder for parents to make that move, or for students to make that move. So we got to start looking at the big picture goals while we're taking all these little steps to get there. So to get an idea of where we're going, it's probably a good idea to see where we've been. And to give some perspective on college choice, historically, it's often what you want to study, school reputation, location, commuter resident, and then cost at the bottom of the list were all your top concerns. But cost was like an afterthought. You know, the mantra was, hey, get admitted to the best college you can. We'll figure out how we're going to pay for it later. And while that still might remain true for certain elite institutions, for most schools and for most people today, cost is the real situation, the real concern, the real problem that families have to tackle down. They're very concerned because often we have to rely on student loans to pay the bill. There's no way that many families can really pay for college out of pocket with the type of income that's available. We see incomes for most people stagnating or in fact declining when you compare it to the increased cost of living. So what do you do? Well, you get more pragmatic, you get more practical, and you start really analyzing the cost versus benefits of attending certain schools. So you start thinking about what career you want, and you start thinking about what do you want to study to get you into that career. And then you can take good observations of how much of that cost is really worth anything. And then school reputation, of course, still remains important, but we see many new institutions entering the scene demonstrating that opportunity can be created in many ways. And then commuter or resident. This is a cost issue that, you know, it's basically, look, if you're going to live on campus, it's going to probably cost you a lot more. But if you're commuting, you can manage your time a little better going back and forth. The difference is having a gas budget, right? So, look, things have changed. Again, people are becoming more pragmatic about their college choice, and the concept of degree ROI, or return on investment, is becoming much more popular a term to consider when you're approaching college choice. You want to make sure you're getting value back for the loans you're taking to attend. And there's something special about Utah. I've visited there now 2 or 3 times. Utah is America's most livable state by way of the Gallup Healthways Wellbeing Index. They're highly ranked in job creation, work culture, clean water and environmental perspective, and there's great people and a certain sense of optimism that makes it a great place to be. It's the state with the youngest median age of 29.2. There really is a certain energy in this state. So if you're in Utah right now looking at your options for where you want to attend, it might be very pleasant to realize that it's right in your own backyard. It has one of the best tech communities, one of the growing technology economies, not just in America, but in the world. And you have schools that are getting very integrated into this technology community, making it very exciting to have access to education there. I seriously think about moving there myself. It sounds like things are really going great for Utah, and it's great to know that you have some school options that can really make sense for you. So, of course, Weber State University is available as a 4-year state school option. University of Utah, Utah State University, Southern Utah University, and Dixie State University. These are all 4-year institutions that are available in the state of Utah. You look at 2-year associates and technical colleges, Salt Lake Community College, Ogden Weber Applied Technical College, USU Eastern. A lot of people wonder about, hey, I'm not sure what I want to do for college. I'm very concerned about what future I'm going to have. I really want to make sure I get a job. What should I do? You might want to take a step back, reevaluate your options, look at community college, get yourself started. You know, it's a smart strategy because you want to get your feet wet and you want to become gainfully employed now. Look at a technical degree. Look at something for 2 years. Guess what? You can go back and finish a complete degree later. You can go back in school if you need to. Continuing education is a huge aspect of many people's lives. You don't have to rush into something if it doesn't make sense for you. Maybe it's more important for you to receive the technical training to get employed now so you can go back later and go to school to get other training in the future. Maybe that approach makes the most sense for you, and it's important to know that it is available. And then you look at your private school, Brigham Young. People know about the football team on a national level, Westminster College. And then Western Governors University, which is actually an online school, is actually headquartered in the state of Utah. So look, there are private schools out there, and there's different options being made available, whether on campus or at a location, you know, in the internet. So there are definitely options available. Guys, the thing about private schools, remember, is that you're going to have a high sticker price. After you qualify for financial aid, that cost can dramatically reduce. Also, you should know about the WUI and the WICHE. This is the Western Undergraduate Exchange, pronounced WUI. That's exactly what it is, the WUI. Tuition reciprocity between 15 Western states. So what it means is you can get a break on your tuition if you live within one of the 15 regional states in the western area of the United States. This would include Washington, Oregon, California, Nevada, Utah, Arizona, New Mexico, Idaho, Montana, Alaska, Hawaii. If I'm missing any others off the top of my head, please forgive me. But it's the 15 Western regional states that qualify for this program. I think Colorado's in there too. And basically what it means is 150% of their normal in-state tuition would be your tuition. And before you think, oh wait, that sounds like a lot. No, actually it's a break. Here's why. I'm from the East Coast. I live in New Jersey. If I wanted to go to school in California, let's say University of Bakersfield, it would probably cost me about $28,000 a year. For someone that lives in California, it probably would cost them about $10,000. But if you're from Utah and you decide to go to school in California that's part of this program, you would be charged 150% of California in-state. That would be $15,000. A real nice savings in comparison to anyone else from the East Coast or places like Florida or somewhere else. So this might be a way for you to access a college out of state without having to pay as high a cost as other families would. And this is a very popular and competitive program with over 28,000 students going for it every year. It's processed through the Western Interstate Commission for Higher Education. It's a decentralized process. It's highly competitive, but if you can follow up with this program, it could really help you out tremendously as far as your school choices are concerned. So guys, College Radar, know your next move. If you're starting college in the fall, you want to make sure your FAFSA gets completed by April 1st for your state's deadline in Utah. Coordinate with your family, work together. It should be a teamwork effort. Complete the overviews, organize family information, followed by your deadline, and complete your CSS profile if necessary. If you happen to be attending an Ivy League institution, CSS profile is a FAFSA with additional in-depth questions that they really get into. If that's not the case, you don't have to worry about CSS profile. After your FAFSA is done, you're going to start getting your award letters. You're going to get follow-up. You're going to have to compare financial aid offers. You're going to zero in on your student loan needs and finalize your school choice. Because remember, you want to think about things not only academically and socially, but also for job-wise and what happens after you graduate and what kind of student loan debt you're actually going to take on to complete your degree there. So if you have any questions, hey, you can email me. I'm ken@lenkey.com. We're on CU Student Loans on Facebook, Twitter, Pinterest. I also would highly recommend you take a look at Weber State's website. They have a lot of great information there. You can see they have lots of opportunities for great discounts on quality products. They're community-oriented and here to help you. Definitely something available. Also, you can check back to this site for recordings of webinars like this ongoing. We're definitely making a big commitment to help students make smart financial decisions about their future. So, guys, I want to thank you for being a great audience. Is there any questions out there? I'd be glad to answer. If you can connect in through your mic, I'll go ahead and unmute you. If you can actually use the prompt that GoToMeeting, you can actually send me information. You can actually just use the prompt to send it over to me if you have any quick questions to ask me. But yeah, guys, you guys have been a wonderful audience. It's very exciting to be in Utah. Like I said, I've visited Utah a few times, and it really is a beautiful state with really friendly people. And I think you might be in position to have a great opportunity to attend college there. So it sounds like we're pretty much wrapped up, guys. Again, if you have any questions, you can email me at ken@lenkey.com. I want to thank you for being a wonderful audience, and I want you to wish you all the best of luck on your college search, college choice, and smart methods for paying for it. Thanks so much, and have a great day.